I don't know about you, but the thought of having to wake up every day and go to work at a job that I hate is pretty much my worst nightmare. On the other hand, the idea of being financially free, of only working when I feel like it and on what I feel passionate about is much more appealing. So I've created what I think is a realistic plan to be able to retire exactly 10 years from today. So by January 2034, the goal is to reach a level of financial freedom where we can simply say no to things that we don't want to do.
Go f yourself.
And yes to the things that make us happy and fulfilled. And in this video, I'm going to break down that 10-year retirement roadmap step by step. The first step in any good plan is understanding what the end goal is. In this case, how much money would somebody need to actually be able to retire 10 years from today? My goal is 1.25 million US dollars. Now, each person is going to have a different personal target depending on where you want to live in retirement and what type of lifestyle you expect to have. For myself, I set the target based on these three factors. I know I want to live somewhere warm. I know I want to have a reasonably comfortable, not a frugal retirement lifestyle. And third, I wanted to set my target higher than absolutely necessary to make sure that I have an extra margin of error. And that way, even if I do fall a little bit short of the target, I'll still be in an excellent position to achieve financial freedom. Now, in my last video, I took a look at 5 countries where you could actually retire today with $250,000 saved up. And that list included some decent places such as Mexico, South America, and Asia. And I know for a fact that I could easily retire and even live large on a $1.25 million nest egg, even after accounting for inflation in the countries that I'm looking at. With that amount of money, it would be possible to safely withdraw $50K per year, which is a 4% withdrawal rate. And depending on what you invest the money in, it's even possible that the total nest egg could still continue to grow. In fact, I even think it's possible to pull off a frugal retirement in a more expensive country like the US with the figures that I'm talking about here today. So that's the goal, $1.25 million by 2034, knowing full well that I'll probably continue to earn a little bit of money in retirement from passion projects and just doing things that I find interesting. And even if I fall a little short of that target, I'll still be in a position to be able to say F you anytime I want and go live on a beach in the Philippines. What is your net worth now versus where you want to be in 10 years? Personally, I'm starting from a position well above zero, but still pretty damn far away from that $1.25 million target. Now, if you're starting from a position of significantly negative net worth, it might be more or less impossible to actually achieve this in 10 years, unless you're in the top percentile of wage earners and you're making something like a couple $100,000 per year. Even if you're starting absolutely from zero, it's a tough proposition because as you can see from this compound interest calculator, you either need to save on average over $6,000 per month for 10 years or make investments that yield much higher than average returns. Of course, that's not to say that it's impossible, and in fact, in the next section of the roadmap, I'll break down why a key part of my personal strategy is to do everything in my power to maximize my income over the next 10 years by doing a combination of creating a business that leverages something other than my labor and making concentrated investments in a few sectors that I think have a higher than average potential return. But putting that aside for now, even if we assume that you're starting with a net worth of something like $100,000 or $200,000, that makes a huge difference in terms of how much you need to save on average every month, and it will make it a lot easier to actually hit the target. Now, once you've set a target and you figured out approximately how much you need to save each month or each year, it's important to understand that this doesn't have to be in year 1, month 1, and it can be much more heavily weighted to the final few years of the decade. Since it's an average across 10 years, maybe you start out a little bit slower and then in year 8 to 10, you make a lot more than you did in year 1 to 3. Or maybe you actually make basically nothing for 8 or 9 years, and then in year 10, you sell a business for $1.25 million. There's a lot of different ways to actually get to the end destination. And that brings us to step 3, which is accumulate the money. The first part of the accumulation phase is to earn as much as possible. At this point, you know what your monthly target is, but obviously the more the better. And this is the part of the plan where it's time to grind and hustle and to start a side hustle and to work 3 remote jobs simultaneously without telling any of your employers. Just kidding. But whatever it takes within reason though. Now, one thing that's important to realize here is that it may not be possible to actually achieve this kind of a target simply by exchanging your labor for a salary or a wage. Unless you're a doctor or a high-paid lawyer or some type of software engineer that can earn hundreds of thousands of dollars per year, most people working a normal salary job would have a pretty hard time saving and investing up to $1.25 million in a 10-year period, especially once you account for cost of living. And so if you don't have a super high paying job, that leaves basically 3 options. 1, try to find a super high paying job. 2, invest in things that are a much higher risk and reward proposition so that you can get higher than average returns on your money. Or 3, start a business and leverage something other than your labor to make money. It could be your knowledge, your capital, your connections, whatever. Now we'll talk about investing in a second, but when it comes to the business portion of this, there's a million different things that you could do. You could invest in real estate, you could do e-commerce, you could launch an agency for social media, you could buy and flip boomer businesses, or you could do something in the media and affiliate marketing space. As I'm sure you guess at this point, my personal approach is to build a media and affiliate marketing business that can earn me money even while I'm sleeping. And unless you are already earning hundreds of thousands per year in salary or on track to have a job like that very soon, I highly recommend you do some research and do some soul searching and find a type of business that you can start that will leverage something other than your labor. Now, once we've begun to earn decent money, the next part of this equation is to save, keep living expenses low, and not blow all the money that we're earning on dumb stuff. A couple of simple tips for this are to create a budget and stick to it, and then to pay yourself first into your savings and investings accounts before you deduct cost of living expenses. Create a separate account, label it retirement, and then never withdraw from it, only add to it. And once you're already earning money and you've got that type of savings structure set up, the only thing to do is to keep monitoring it and make sure that expenses don't get out of control and that you don't get caught up in the hedonic treadmill, always scaling up your living expenses with your income. Because remember, it's a lot easier to save 50% of your income when you're making $200,000 than it is when you're only making $50,000 per year. Now, the only other thing I'll say here is that I do think it's important to strike a balance. You don't want to live absolutely super frugally for 10 years and miss out on some of the prime years of your life. And so I do think it's important to strike a reasonable balance without sacrificing quality of life today. And the third and final element to the accumulation phase is to invest those savings. For starters, anybody that has high interest debt needs to immediately pay that off before moving on to the investment part. In my opinion, mortgages don't count because it's basically a leveraged investment with a low interest rate. Beyond paying off the high interest debt though, the most important thing is to invest in something, because if you don't, then you will just lose your purchasing power over time. My investment strategy is a personalized version of something called a barbell strategy, where I invest a decent chunk of my money into super safe blue chip investments like total stock market indexes, and then I invest another portion of my money in high risk, high reward asset classes like AI and cryptocurrency. I have a high risk tolerance and this strategy works well for me. Of course, you have to figure out what you are comfortable with and do your own research when it comes to picking and choosing investments. Another important element of this invest step is to try to optimize taxes as much as possible. If you have a tax-free investment or savings vehicle in your country, like a Roth IRA or a tax-free savings account, then it's definitely important to use that to your advantage. And if you can afford it, especially once you get to a certain level of wealth, hire a tax specialist that can help make sure that you're not unnecessarily paying too much, because if you do, you could lose hundreds of thousands of dollars in the long run to taxes. Step 4 here is stay disciplined. Avoid impulse spending, maintain an emergency fund, and keep your eye on the prize. Over a 10-year period, it could be pretty hard to retain and maintain focus and motivation. And so maybe having some sort of a reminder of the type of financial freedom that you're aiming at, maybe it's a poster or a sticker somewhere that you look at often and reminds you of what you're trying to accomplish so that you can stay steady. And the final step is to enjoy the fruits of your hard work. Retire if you want, or keep working and increase your net worth even more, knowing full well that at any moment, if you want to or need to, you can simply say F you and go live cheaply on a beach somewhere nice and warm. Thanks for watching. Hopefully you enjoyed this video, and if you did, you might also like this one. See ya.